Hi, good morning. Welcome to Vermont Legal Aid's 30-minute town hall. My name is Amelia Schlossberg, and I work at the Office of the Healthcare Advocate at Vermont Legal Aid. This town hall is being broadcast live to Facebook, and we also have attendees joining us on Zoom, and we're also recording this so you can watch the video later or rewatch the video. If you have any questions for our panelists, our guests today, you can type those questions if you're joining us on Facebook into the Facebook Live comment section. And if you're joining us through Zoom, you can type the questions into the Q&A box at the bottom. If you're listening in over the phone, you can call our office for free confidential help after the webinar is over if you don't find any answers on our website. Vermont Legal Aid and Legal Services Vermont have co-ownership and work together on a project, which is our website. That's www.vtlawhelp.org. That website has lots of information about healthcare, taxes, health insurance, and many other civil legal issues that we've been covering in these town halls. Our plan today is to talk for the first 30 minutes about general information that everyone needs to know. Our topic today is health insurance and taxes, and we'll be talking about advanced premium tax credits. Again, my name is Amelia Schlossberg, and my guests today are Emily Benz and Zach Lees. Thank you so much for joining us, Emily and Zach.
Hi, my name's Emily Benz. I am a healthcare advocate at Vermont Legal Aid. I work on the helpline, answering calls from Vermonters. I have been untangling the tax implications of health insurance since 2014. And the Healthcare Advocate's Office can help any Vermonter with their healthcare or health insurance questions.
Thanks, Emily.
Hi, I'm Zach Lees. I'm a staff attorney at Vermont Legal Aid's Burlington office, and a lot of my time is spent working on our low-income taxpayer clinic, where I represent taxpayers who are dealing with a tax controversy with the IRS or the Vermont Department of Tax. And through that work, I represent those taxpayers to help resolve and manage any tax deficiencies or controversies they have.
Thank you, Zach. So we're talking about health insurance and taxes. First of all, when are taxes due this year? When's the tax filing deadline?
Yeah, so normally the tax deadline is April 15th, as most people know. However, due to the coronavirus pandemic, the IRS announced that they were extending the deadline to July 15th, and most states, including Vermont, followed suit. So the filing deadline for 2019 tax year is now July 15th, which is next week. So now everybody should be getting their taxes filed by July 15th.
Great. So how do we go about doing that? I know that there are some changes in the options for filing taxes because of the pandemic.
Yes, the pandemic has created some hurdles and changed the way that many people and many of our clients usually file taxes. Many of the volunteer income tax assistance sites, which were in-person sites set up to help people prepare and file taxes, have been closed to in-person meetings since March. Because of that, the options to get your taxes prepared and filed are a bit more limited these days. On our website, we have links to the IRS webpage, which provides several different software options, many of which are free for most taxpayers who earn about $69,000 or less in adjusted gross income. So if you're at that income level or below, there are many different free filing software options available through that IRS website. Unfortunately, if you're earning above that amount, your options are a bit more limited. There are some more limited software programs available to help you through the process. And if you can't access those for whatever reason, your options are to either use the fillable electronic tax forms, which would be your Form 1040 and the related schedules, or actually print out paper forms and fill those out. Unfortunately, as a taxpayer, it's your responsibility to prepare and file accurate tax returns. So If you're printing out tax forms or filling out these fillable electronic forms, you need to make sure that you're doing all of the correct forms, and that includes your 1040 and whatever other schedules or related credit forms that you'll be required to fill out, one of which is what we're going to be talking about today, which is the Form 8962, which is related to advanced premium tax credits.
Thanks, Zach. So just so I understand correctly, if you are making less than $69,000 in your adjusted gross income, you can file for free online. And the place to find those websites where you can file for free, you can go to our website, which is the www.vtlawhelp.org, and we'll walk you through finding getting the link to the correct website, because sometimes there are some scammers out there. And if your income is over that $69,000 adjusted gross income, you can either pay to use those websites, or you have some free options, but they require a little more careful work on your part to make sure you're filling all the forms and you're not missing anything.
Right.
Great. So what if someone has a conflict with the IRS?
Right. So generally, the IRS runs on what they call correspondence. They're usually not going to call you. What they'll usually do is send you a letter. So if you get something in the mail from the IRS, open it up and take a look. And, it can be very simple. They could just be asking for a bit more information, which you can provide. But if you do get a piece of correspondence from the IRS, you can call Vermont Legal Aid up, and we can help figure out what exactly the IRS is looking for. And if there's a tax controversy there, depending on your income levels, we can represent you and even represent you in an audit, or help you manage if you're going to end up owing the IRS some money.
Great, thank you, Zach. So, Emily, why do healthcare advocates have to help with taxes? What's the intersection between healthcare advocacy and tax work?
Well, your health insurance can absolutely impact your taxes, and there are questions about health insurance when you go to file your taxes. And your tax filing, including who's included in your tax household and your taxable income, impacts your health insurance options.
Got it. I know oftentimes tax filing asks the question, do you have health insurance? And there can be sort of things around that. But I know too that there's a tax credit specifically around health insurance. What is the advanced premium tax credit?
The advanced premium tax credit is a tax credit that lowers your monthly health insurance premium, and it's often abbreviated as APTC for advanced premium tax credit.
Thanks. So who gets the advanced premium tax credit? How would I get it?
Well, first of all, you have to buy your insurance from Vermont Health Connect. That's non-negotiable. You can't get the advanced premium tax credit if you can get on other insurance like Medicaid, Medicare, or insurance through your employer. If you have Medicare and Vermont Health Connect, or you're getting ready to go on to Medicare and you have questions about that, please give us a call, because Medicare can be pretty complicated. Our number is 800-917-7787. Your income has to be under a certain cutoff in order to qualify for the advanced premium tax credit. And finally, you have to file taxes any year that you receive advanced premium tax credit. So that means if you received advanced premium tax credit last year, in 2019, that you are required to file your taxes by July 15th. You can't usually file as married filing separately. If you're married, there's a few very narrow exceptions to that that you can call us about. They're domestic violence related or spousal abandonment.
So if you're married and you want to get this tax credit, you have to file as married filing jointly for the most part.
Yes, usually.
Okay. Can you tell me sort of what are the income ranges we're talking about here? I know some tax credits are only if you're making very little money and some are more. What's the cutoff for a family of 4 income cutoff?
For 2019, a family of 4 would have to make under $100,400 for the whole tax household. So it goes up pretty high. A single person would have to make under $48,560. So that's kind of gives you a ballpark.
Got it. So that's the income limit. And so how much is this tax credit?
It's the amount of advanced premium tax credit you can get is based on your tax household size and your income, as well as the price for the average plan in Vermont. So it's a pretty complicated equation, which means it's really important to update Vermont Health Connect on any changes to your household and income. And you can estimate your cost by going online to the Vermont Health Connect website. Their plan comparison tool will estimate how much advanced premium tax credit and Vermont state premium assistance you can get.
Got it. Okay, so you said there was an advanced premium tax credit and Vermont premium assistance. Why is the tax credit called a tax credit? It sounds like it might just be like sort of almost like a discount on your health insurance prices.
Right. It's a tax credit because it's given to you in advance to help pay for those monthly health insurance premiums, but you do have to reconcile it on your taxes. So when you go to file your taxes, the IRS is going to want you to double check that you got the right amount of advanced premium tax credit based on your end of year actual tax household size and income. So if you got too much advanced premium tax credit, you'll have to repay some, which can reduce your refund or mean that you owe money to the IRS. If you got too little advanced premium tax credit, you can maybe get a larger tax refund. You get a form 1095A from Vermont Health Connect, and you have to use that to reconcile the premium tax credit. That's what you use to fill out form 8962 that Zach was talking about earlier.
Got it. So it's a tax credit because it shows up on your taxes and there are tax forms you have to do if you get it. Great.
Right. And I'll just add that when you go to file your tax return, what you're doing is you're reporting how much money you made and what your tax family size is through that whole year. So when I file my tax return on July 15th, I'm reporting to the IRS how much I made in 2019 and who is in my family. And that may have changed from the beginning of the year when I first got onto my health insurance plan. And unfortunately, there are certain situations like if I withdrew money out of an IRA, or I got some sort of inheritance that I wasn't expecting, or if I made more money at a job than I was expecting to, then my income is going to end up being more than what I estimated it to be at the beginning of the year. And those are the situations when people are going to potentially owe back some of this tax credit that they got at the beginning of the year in advance, because they didn't really know how much they were going to make throughout all of 2019. Now that 2019 is over and we're finally reporting this information to the IRS, this is when they can say, oh, we thought you were only going to make X amount of money, but you made more than that. So doing this reconciliation is when you're going to figure out if you have to pay back some of this or not.
Got it. So when you're talking about paying back some of the tax credit, Emily, what about the opposite? What if your income goes down during the year? What if 2019 you made less money than you thought you were going to make?
If you made less money in 2019, you will get more money back on your tax return. You are supposed to report changes to Vermont Health Connect within 30 days. I really recommend people who are on Vermont Health Connect right now to keep reporting any changes. I know some people's income is a lot more uncertain at these times. If your income has gone down, it can really help you to report as soon as possible too, because you could be getting more advanced premium tax credit every month and have a lower monthly premium, which can really help you out. Or you could even be Medicaid eligible, and Medicaid is a comprehensive insurance with no premium and very low copays. So that could be a much better choice for you.
And a $0 deductible, right, on Medicaid?
Correct.
Yes.
I say very low copays. There's almost no copays, but there's some copays for prescriptions and office visits. They're just in the $1 to $3 range.
Mm-hmm. Okay, so we're talking mostly about people filing their 2019 taxes right now, or before July 15th. What can we talk for just a second about what if some people are getting more income right now, maybe with the extra $600 unemployment? Do you have to report that to Vermont Health Connect?
You absolutely should report that to Vermont Health Connect. You don't want to be surprised when you go to file your taxes for 2020 and have to owe back a lot of advanced premium tax credit because you weren't updating Vermont Health Connect all the time. I know that the extra $600 in unemployment is set to end, but you really should report it now, pay a little bit more for your monthly premium, and then if and when your income goes back down, you can always report that change as well. You just want to try and be as accurate as possible so that, again, you're not surprised when you go to file your taxes.
And I'll just add there that it's always more financially beneficial to pay more now than owe the IRS later, because when you owe the IRS, there will probably be an interest and penalty rate. So you'll end up paying more later than if you just reported these changes in your income now and paid a bit more in your premiums.
Zach, you're referring to if you owe taxes. Let's jump ahead. Let's say it's 2021, the world is different, and you're filing your 2020 taxes. It's, let's say, April of 2021, and you forgot to, or you didn't report all these changes. If you get that big tax bill then and you can't pay it, the IRS starts giving you additional charges if you can't pay that tax bill.
Correct. Yeah. And the Vermont Department of Tax charges a failure to pay penalty as well. So if you file a tax return that shows a bill there that you owe tax and you don't include payment, so if you have a big tax bill and you just can't afford to pay that whole bill right away, you're going to end up with a failure to pay penalty, which is going to increase the amount that you are going to end up owing. So it's always better to pay if you can, and that's why reporting these changes during the year when they happen is really a good idea, even if your premium is going to go up as a result.
Got it. So Zach, is it better to file taxes knowing that you maybe can't pay the bill, or to wait and not file taxes until you think you can pay the bill?
Yeah, that's a really good question, and I see a lot of people, especially people who are self-employed, if they've not been doing the right withholding, or people who have had income changes and know they're going to owe back a lot of APTC, they think, well, I'm going to owe a bunch of money that I'm not going to be able to pay anyway, so I just won't file my tax return. And that's never the right way to handle this, because you're going to add on a lot more cost to what you're going to owe. So we always encourage people, you want to file even if you can't pay that bill. And if you end up with owing the IRS, give us a call and we can help you manage that. There are thousands of people in this country who owe the IRS. This is not anything to be ashamed of, and it's not anything to really stress about. There are many different ways to manage this appropriately, but filing your tax return is the first step to do that. So filing on time is really important, and you'll set yourself up for success further down the line if you file a tax return on time.
Got it. Okay. And just to clarify too, if you are filing your taxes now, your 2019 taxes now, and you get it in before the July 15th deadline, and you also include the payment, maybe you need to pay back some of that tax credit, you include the payment now, you're not paying any extra fees on that if you pay by the 15th.
Right. You can avoid a failure to pay penalty if you include payment with your tax return.
Got it. So there's no interest or fees on this tax credit, as long as you reconcile by the tax filing deadline.
Right.
Great. Okay. So we talked about if your income changes, if you lose income and your income goes down, your tax credit goes up. And if you get more income than you expected, and you don't report it, then your tax credit goes down. You may have to pay back some tax credit at tax filing time. What if your household size changes? So what if I get married, for example, during the year?
It's a great question. Again, you should report that change to Vermont Health Connect as soon as you can. You could have more income in your household now, but your household size has also increased, or maybe your income stays the same, but again, your household size increased. So depending on your circumstances, your monthly premium could go down or it could go up. And particularly with getting married, you'll need to remember that if there's an employer offer of insurance to spouses, that could mean that you don't qualify for the advanced premium tax credit anymore. So that's something you need to look into. And again, you will want to file as married filing jointly.
Got it. So you're saying if when you get married, there's an added situation of your spouse's money is now counted. So how does that change things? Because it's an addition of a family member plus your change in income. If you have a baby, for example, they're probably not bringing in much income, the baby itself. So you have an increase in household size, but not an increase in income. So things change differently.
Right.
Got it. Okay. Thanks, Emily. So how much money are we talking about? You said that the tax credit depends on the household size, and it depends on the household income, and it also depends on the cost of the average plan. How big could this tax credit be for someone?
So you get more advanced premium tax credit the lower income you are. So, it kind of gradually increases like that. But if you are just $1 under the limit, under the income cutoff, you could save up to $2,600 in 2019 as a single person. That jumps to $8,400 for a couple and $11,000 for a family of four, just by being $1 under the limit. So there is that kind of benefit cliff. And so then the savings from there can just increase the lower the income is.
So that's the smallest amount of tax credit. Would be $11,000 for family of four, but then it gets bigger and bigger depending if there are more people that are on the insurance, or if there are, as the price of the plan maybe goes up, if there's more people on the insurance, or if your income is lower. Great. So if your income, and so a lot of people are just getting this tax credit every month as they get their health insurance. They're not doing anything really actively to get it except for just being on Vermont Health Connect. But some folks maybe didn't get it all along. Maybe their income was over the cutoff. Is it possible for someone, can you lower your income to get under the limit and get the tax credits at tax filing time?
It is very possible. That's why we're doing this town hall now, is because there are some pre-tax deductions that you can take up until the July 15th tax filing deadline in order to lower your taxable income that's used to calculate the advanced premium tax credit. So you can still put money away now in certain accounts. The most common ones are the traditional IRA, which is an account for saving for retirement, or a health savings account, an HSA. And those are the ones you're most likely to be able to do yourself. Traditional IRAs, they're to save for retirement. The most you can put into a traditional IRA is $6,000 a year, or $7,000 if you are 55 or older. And you can do that again up until the July 15th deadline. You can't do the Roth IRA. That's a post-tax deduction, so it won't lower your taxable income. You should talk to a tax preparer if that's something that you're interested in, to make sure that it's the right choice and that it's going to actually help you with the advanced premium tax credit as well. The HSAs are used to save for health expenses. You can only put money into an HSA for 2019 to take as a deduction on your 2019 taxes if you had a plan in 2019 that was compatible with an HSA. And there's a couple requirements for that. Any of the Vermont Health Connect plans, it should be noted both with the insurer and on the Vermont Health Connect website whether or not they can be used with an HSA. And the maximum amount is a little bit harder to calculate because it depends how many months you were on that plan and how many people were on it. So if you have questions about that, you can definitely give us a call or talk to your tax preparer.
Thanks, Emily. So it sounds like the income that Vermont Health Connect and the IRS uses to calculate how much of this tax credit you can get is based on your taxable income. And so if you put things into a pre-tax savings account for 2019, you can lower your taxable income and actually get more of that tax credit. And then HSA or a traditional IRA are two ways to do that. Can you also do that now for 2020?
Absolutely. You can start doing that now if you want to start being able to get advanced premium tax credit monthly because you're not getting it already, or if you just need a little bit more and you want to be saving for these types of things, retirement and health expenses anyway. There's also a lot of other pre-tax deductions, most of them offered through your employer that you can look into. And so you can talk to your HR or something about like a dependent care FSA or something like that.
So Emily, these sound like really good options potentially for someone that's income is just a little bit over the cutoff. They weren't getting premium tax credits, but they were on Vermont Health Connect. And now they can get under that cutoff and they can get these maybe up to $11,000 for a family of four in tax credits now at tax filing. But what about, can these be used to help someone that had lower income and then their income went up during the year?
Yeah, if someone is doing their taxes and realizing that they're having to pay back a lot of advanced premium tax credit, this can be one way. Maybe you went up over the income cutoff and you want to get back underneath it, or you're just being asked to repay a lot If you get under the income cutoff, there are repayment limits on how much premium tax credit you have to repay. And there's a couple different tiers of those. So getting under the income cutoff generally, or the income limit for one of those tiers, could help mitigate that repayment and really save you some money, while also saving money for retirement, a house savings account, because you're trying to lower your taxable income. I recently helped someone put some money aside for retirement and was able to save them $13,000 using some of these repayment limits. So it can really, really help out.
Wow, that's big. And so if you have, if your income has gone up and you're being asked to pay back some of this premium tax credit, or required to pay back this premium tax credit when you file taxes, there's a repayment limit. So you won't owe back all of the tax credit if your income is under the big cutoff. And so there's limits depending on how low your income is.
That is absolutely correct.
Great. Okay. So we've been talking a lot about this July 15th deadline. And what happens if you can't meet this July 15th deadline? What if you can't get your taxes in by then?
Yes. So you can file for an extension of time to file your taxes, and both the IRS and the Vermont Department of Tax have their own specific form that you would send in. And if you timely file those forms by the July 15th deadline to get an extension, you can extend your deadline to October 15th. Now, that can be a good option for a lot of people if they're just not able to get their taxes prepared and filed on time. But there's two important things to remember about filing for an extension. The first is that you're not getting an extension of time to do those pre-tax contributions to HSA accounts or IRAs. That's July 15th, whether you file your tax return on time or not. So filing an extension won't get you more time to move money around in that way. The second thing is that if you file a tax return, so if you file an extension and you file your tax return in October, and you create a deficiency, so your 1040 at the bottom says that you owe the IRS $2,000, you are going to be penalized for failing to pay that money, and there will also be an interest rate from the July 15th deadline and not the October 15th deadline. So it's just something important to remember here, that even though you won't get a failure to file penalty because you're filing on time if you timely file an extension, the interest rate for failing to pay that money is going to start ticking from the July 15th original tax filing deadline. So if so filing an extension can be a really good idea, but really you should think about whether you're going to end up owing the IRS or not. And if you're going to end up owing the IRS, you just need to remember that it's going to start ticking from July 15th, and the interest will start accruing from July 15th and not from the later extension deadline. So two small things to remember there, but filing for an extension is much better than not. So if you think you're going to miss that July 15th deadline, file your extension. It's a very simple form. We link to it on our website. They're electronic. You can fill them in electronically and print them out and mail them in. They're really simple. They're very accessible. And really, if you think you're going to miss that July 15th deadline, get those extensions in, because that can save you money and save you that anxiety of, oh my God, I missed the deadline and I haven't filed anything. Get yourself till October 15th.
Great, thank you, Zach. So, and thank you, Emily. If anyone has any questions, please go ahead and type them into the Zoom question and answer space, or you can type them into the Facebook Live video comment section. We'd be so glad to answer any questions that folks have about health insurance and taxes. And if you do end up needing more help, whether it's today or in the future, whether it's about advanced premium tax credits or other tax conflicts, tax issues, or other health insurance issues, the number to contact the Office of the Healthcare Advocate is 1-800-917-7787. You can speak with a healthcare advocate, Emily, or one of the other healthcare advocates. And the number to get in touch with our tax attorney here is Zach, and to get a consult with Zach is 1-800-889-2047. Again, all of our help at Vermont Legal Aid is free and confidential. And we're so glad to work with folks that are having any of these problems, answer any questions that you may have, and help you untangle any things that are getting in your way here. And while folks are thinking about questions, I can ask one that we get pretty commonly. Zach, we often hear from people saying, I got a letter from the IRS, what do I do?
Right. So, as I said, the IRS runs on paper correspondence. They're usually never going to call, so they end up sending letters. For advanced premium tax credit purposes, IRS will send two different letters sometimes. The first is a failure to reconcile letter, meaning that you didn't do that Form 8962. That's where you compare your estimated income that you gave Vermont Health Connect at the beginning of the year, and you compare that to what you actually earned through the whole tax year. So if you didn't do that, the IRS will say, hey, your tax return is incomplete. You need to do this reconciliation form. Please get this in. So we always say, like, open the IRS letter and read it. Sometimes they're asking for very simple things. In this case, if they're asking you to get your reconciliation form in, that is a pretty simple form. You should call us if you need help doing that. The Office of Healthcare Advocate doesn't have any income eligibility requirements. So I believe you can always talk to a healthcare advocate in Vermont, regardless of how much money you're earning. For my low income tax clinic program, we do have income eligibility requirements. So I may not be able to do a full representation for you if you're over our income limits, but I can always speak with our healthcare advocates, and I can always get on a call and have a consultation to talk about what's in that letter and what the IRS is asking for. So with APTC, the first letter is usually, you didn't do the reconciliation, please get that form in. That's pretty simple. The second form could be an audit saying, we think you didn't do your calculation correctly, and they could be proposing a change to that. It's really important to remember that when you get these letters, you have the ability to respond to the IRS, and we can help you understand what they're asking for and how to respond. And then the final letter, which may come further down the line, would be, you owe us money. That's the deficiency letter. And there's a couple different kinds of deficiency letters, ranging from, we think you owe us money, respond and let us know what you think, to like their formal demand letter where they're saying, you owe us money, you have 90 days to petition the US tax court. If you miss this deadline, you don't have any more ability to argue with us. So depending on what letter and where you're at in the process, you have different options. And to understand what that is, give us a call and we can help walk you through that.
Great, thank you, Zach. Emily, I know a question that we get sometimes in the Office of the Healthcare Advocate is, I think Vermont Health Connect made a mistake. I'm doing my taxes and I think something's wrong. I owe a bunch of money back or something's not adding up. What do folks do in that situation?
Well, you should absolutely call us at 1-800-917-7787 to talk through your options. We can research the issue, figure out if you have other options. There are many times, unfortunately, when Vermont Health Connect has made a mistake, usually in your income, and you still have to pay back a lot of advanced premium tax credit, even though it was Vermont Health Connect's mistake. And that's really unfortunate. You always have the right to appeal with Vermont Health Connect, but I'd absolutely want to talk to someone before recommending that, because maybe there's a way to resolve it without doing that. And we can talk about if there's things we can do on your taxes to maybe help with repayment, or we could talk and see if Vermont Health Connect made an error that they can fix and that we can help you get fixed. Then that is absolutely something we can help with.
Got it. Another question that I think can come up is, can I get these premium tax credits if I bought a Vermont Health Connect plan directly through Blue Cross Blue Shield of Vermont, or directly through MVP without going through Vermont Health Connect?
Unfortunately, you cannot claim the advanced premium tax credit even on your taxes, like at the end of the year, if you bought direct from Blue Cross Blue Shield or MVP. You have to go through Vermont Health Connect. They're the only ones that can get you the tax forms you need, and they're the only ones that can estimate your eligibility for the advanced premium tax credit ahead of time. If your income changes throughout the year, maybe you signed up direct through Blue Cross Blue Shield because you knew you didn't qualify for any advanced premium tax credit and it seemed much easier, which it can be. But your income changes, you can switch to Vermont Health Connect mid-year, start getting those advanced premium tax credits, or even switch and even if your income goes back up and you're no longer eligible for advanced premium tax credits at the end of the year, you can still then claim some if you can get your income under the limit. So going with Vermont Health Connect leaves you with more options at the end of the year.
Got it. So someone right now in 2020 that's been directly enrolled in health insurance through Blue Cross Blue Shield or MVP, as an individual could now, if they want to be eligible for these tax credits, they could switch to enrolling through Vermont Health Connect, perhaps even on the same plan,
Yes.
but being qualified.
You do need to have a change in income or household in order to switch. You need to have a special enrollment period for this.
Got it. Okay.
Which a lot of people do right now.
Yeah, so let's talk about that just briefly. There used to be a penalty for being uninsured, and it was a tax penalty, or it was a payment that you made when you filed your taxes if you were uninsured. Is there still, that was one way that insurance and taxes lined up. Are they still collecting that payment from people that don't have health insurance? Like if you were not insured in 2019 and you file your taxes now, is there still a payment that's being collected?
For 2019 and so far going forward, there's no penalty for being uninsured. So you don't have to weigh that in your choices about what type of insurance or whether or not to sign up for insurance.
Okay. And what if you're uninsured now and you decide that you want to get insurance because of the pandemic? Is that an option for you?
That is absolutely an option for you. There's a special enrollment period due to the pandemic with Vermont Health Connect until August 15th. So you should call Vermont Health Connect and sign up. You can also sign up online. Also, again, remember if your income has gone down, you might be Medicaid eligible. You can apply for Medicaid at any time. And if you're income eligible, they will sign you up right away. Also, if you've lost health insurance, like from your employer, you always have a 60-day special enrollment period to sign up for health insurance with Vermont Health Connect.
Got it. Okay. And if you've lost insurance from one employer, but you could get insurance from a spouse's employer, do you have some time to switch as well?
Yes, employers are only required to offer a 30-day special enrollment period, so you need to be a lot quicker on the ball with that. And remember, if there is an offer of insurance from your spouse, you probably don't qualify for the advanced premium tax credit, so you might not have affordable choices. You might have to go with the employer offer of insurance.
Got it. Okay, that's important. Wonderful. Well, thank you both so much for joining us today. This recording will be available on the www.vtlawhelp.org website. And if you have any questions, you can get free confidential help by calling the Office of the Healthcare Advocate at 1-800-917-7787. And there's also our website, like I just mentioned. If you don't see your answers to your questions on our website, you can call Vermont Legal Aid as well to connect with the tax help from Zach. That number is 800-889-2047. Thank you so much, Zach and Emily.
Thanks, Amelia. Thanks, Emily.
Thank you.